is Justin. I'm the co-founder and CEO of Phelas, and as we like to say, we make the sun shine at night. Now, we want to make 100% renewable energy globally a no-brainer. And before I start now with the pitch, I wanted to remember three things at the end of my pitch. Number one is which problem are we actually addressing? Number two is what does our solution look like? And number three is what do we make different also in our business model? So to understand the problem is not that renewable energy is expensive. It's the cheapest source of electricity in human history. That has been officially also announced by the International Energy Agency already in 2020. So you might wonder then, what is the problem? And the problem is the intermittency. By now, most people know that the sun doesn't shine all the time and the wind doesn't always blow all the time, but we need a solution for that. And the solution is actually to shift large amounts of energy from when we have more than we need to when it's not generated with energy storage. Now, our solution is an energy storage system combined with a software component, but mainly we're talking about a liquid air energy storage. It's a containerized solution. And what really makes it unique is its flexibility, its scalability, and its low cost. Now, how does it work? Sounds super complicated. Liquid air, what is that? The simplest way to think about it is the same way that if you boil water on your stove at home, there's pressure increasing. And if you have water vapor and you cool it down, it becomes liquid. We effectively do the same just with air, not with water. Now, why do we do this? There has a couple of benefits. A, it's a scalable solution because it's containerized, because it is modular, we can mass manufacture it and leverage economies of scale using mass manufacturing. It is low cost because the materials we use are mainly steel, gravel, and air, and we're probably not going to run out of gravel anytime soon. It's modular and transportable, which allows a new kind of business model, more on that in a bit. We have filed a patent on the process, yet the most components we use are off the shelf. So that is a good de-risking on the technical side, yet having defensibility because of the patent on the process. It's a very safe system, and we can build it with local supply chains. May that be Western supply chains, Asian supply chains, becoming increasingly important when we talk about the energy space. Now, who wants that? There's a couple of different customer groups across the value chain, from generation to transmission to demand. And we, as we speak, have a first pilot customer on the side of the commercial industrial. It's a wood pellet factory in Germany who also has renewable energy generation on site, but that company is wanting to build with us the first large scale system. Now, I mentioned as the third part, the business model. And the classical business model is for most energy storage, you sell it, maybe have a service contract, thanks, but that's it. But that does not incentivize sustainability. When we started the company, we wanted to make a scalable company that has sustainability in its core. And our system lasts 20 to 30 years. It has no degradation. But our customers might only care for 5 years because their project lifetime is 5 years. So there's no financial incentive for us to build a more sustainable, longer lasting product. And that is something that we wanted to fix. And the best way to fix this by going towards energy storage as a service. So that means the customer has a recurring revenue, has a recurring subscription to a storage on site or even remotely. And then after 5 to 10 years, we can relocate because it's containerized, because there's no degradation. So we can charge per use, but we don't have any cost per use. Now, who's building this? We're a top level team of 13 heads by now, 7 full-time. We cover all relevant areas of the business, mainly focusing around 3 core pillars: strategy and operation, product, and marketing customer. Because in contrast to most deep tech startups, we didn't start with the technology. We started with understanding there's a market need for long duration energy storage and then developing a technology exactly for that customer and market pull, not the other way around. Now, we are raising right now money. That's why we're here, to quote you from the beginning, Matt. We are raising a 6 million seed round. This round will allow us to scale up from a prototype in the lab that we have
40 seconds.
Today. Yes, thank you. And will get us 24 months of runway. But now, last but not least, I told you in the beginning, you should remember 3 things. I want you to remember one thing, and that is we want to make 100% renewable energy globally a no-brainer. And that is all I want you to remember. Thank you.
Awesome. I think we can remember that. I think we can all toast to that. Let me pull myself and Pratibha back in. Pratibha, do you want to take things away? Do you have questions for Justin and Phelas?
Thank you for that, Matt. And thank you for the pitch, Justin. To perhaps kick off, Do you mind sharing a little bit about yourself? And love to understand the team's unique capabilities and skill set to be able to pull this off.
Sure. So short background story about me. I co-founded my first company in parallel to studying my bachelor. Did some import business. It took away the fear of founding. Like in Germany, that's very prevalent. That there's a big fear of founding a business. So that was gone after that. My personal background, education-wise, is industrial engineering and then material science in my master. But after that, I had the privilege to travel around the world, saw a lot of the world and how different it can be, and also what it might mean to build globally scalable solutions. And then worked in 2 startups afterwards, one medical AI startup and one a semiconductor hardware startup, before then being frustrated with management in most places and saying, okay, if I'm already always frustrated, maybe I should do it myself, so I'm at least frustrated with myself. So that was combined then with a longtime friend, Leon, co-founder, who analyzed in a techno-economic analysis, do energy storage actually, are they profitable if you put them on the Iberian grid? And that sort of jump-started the whole Phelas endeavor. And then from a team perspective, we have we hired Masood, who is came from one of the best universities of Turkey, got him to immigrate to Germany. Pitt is a top physicist. And Christopher is actually the brother of my previous co-founder. And he has a business psychology background. So it covers a lot of the operations early on, which is super valuable, but also having good contacts into the DAX, German highest companies there. And bringing that all together, what really is interesting is that it's very differing viewpoints, yet there's always a consensus that we strive for understanding in the team. So we always get the feedback that when we discuss or when we communicate, it's very different. Yeah.
Love the richness in the experiences and the team profiles. I'm curious, given that you guys started off with really looking at the pain point and the landscape, do you mind sharing a bit about the players in the market and what makes you guys unique?
So there, in the market that we're focusing on is the so-called long duration energy storage. So that's anything above 6 to 8 hours. Lithium battery storage projects are now somewhat getting into that range, but if you ask me, they're just still too expensive. It's just that the market is so bad that these expensive projects are actually able to proceed. Looking at the long duration storage, there's different technologies, different companies at different stages. What we most see being proposed are these OEM kind of solutions. I build a large facility, I build monoliths, I build custom engineering. And what is really, what we have not seen anybody do, like some might have a modular system, but they're going away from it. Like there's a company, ESS, who started with containers and they're now going to an energy warehouse. But I think the interesting thing is, and that is not yet seen much in the industry, is the ability to move your asset and decouple project lifetime from asset lifetime. Because right now they're always coupled. So you always have to somehow figure out, how does your asset make financial value, make profit at this location in the grid, in this configuration? And we're like, no, you just have to bet that there's demand somewhere, and then you can adjust over the years. And that combined with mass manufacturing to drive down cost and the flexibility, we don't see that from other competitors. If you look at Form, they have not built much that you can see. So it's always a bit interesting to see how they're doing. Their efficiency is lower, but they're more focusing on seasonal. If there's Highview in the UK who are doing liquid air energy storage, but large monolithic systems. So this combination, I think that we do is truly unique there.
Got it. Thank you so much, Justin. Over to you, Matt.
What about versus supercapacitor-based batteries?
Supercapacitor-based batteries are on the opposite end of the spectrum. So a supercapacitor is focused on providing a lot of power in a very short time. So if you want to accelerate fast in your car, then you use capacitors. If you want to drive a long distance in your car, you would use batteries, or if you think of the energy grid, you would increasingly use long duration energy storage. So in the future energy system, we will probably still see lithium-ion batteries, if not even supercapacitors on the grid, for these very, very short-term stabilization of the grid. Somebody starts up a big machine in a large industrial facility. There you would have a supercapacitor to help you with this sudden peak of power, but then to shift large amounts of energy, that's what you need different technologies for.
How do you guys compare to lithium ion in terms of cost per storage? So for instance, we invested in a supercapacitor based battery system that has smart, basically it combines the best of supercapacitors and lithium ion. So you have the same energy density, but 100x the power density and costs about half. How do you guys come out cost-wise and doesn't degrade, which is the biggest problem really with lithium ion is you get 1,000 cycles and then you just start to go downhill from there.
So from a cost perspective, like there's two aspects to that. One is, of course, at what point of scaling are we? What kind of mass manufacturing are we? Because nobody has scaled this technology yet. So there's a lot of low-hanging fruits to reduce costs very quickly in the beginning. We can very quickly reach cumulative costs of less than 100 euros or $100 per kilowatt hour. But the longer the duration of the project, the more we are cheaper. Because that lithium, you might pay so if you make a lithium go from 1 hour to 2 hours of capacity, you might pay effectively 1.8 times as much. Versus if we increase the duration, you pay maybe 10% more or 20% more. So if you have a need for 12 hours, 15 hours, 18 hours, that's where all of a sudden the gap widens. Like the longer the duration, the bigger the gap between lithium and us. And from a component level cost, we can reach less than 50, probably even less than 30 euros per kilowatt hour on the energy side.
Oops. Is that changing cost or that growing gap due to the degradation of the lithium ion batteries is what I'm asking? Because if that degradation doesn't exist and the batteries then were able to stay fully charged without any type of kind of degradation, or they could last longer, then cost-wise, you guys wouldn't be improving versus lithium, would you? Or versus a kind of combo system?
It's a bit different. You can imagine a lithium-ion battery as thinking of, okay, lithium-ion battery always contains the motor and the battery of an electric car. Whereas in a supercapacitor case, you have mainly the motor, and normally, unless you have a special technology that you have invested in, a tiny battery. And in our case, you have a large battery and a tiny motor. But for us, the cost to increase the battery without adjusting the motor is super low. Whereas it's lithium, you always get both combined, because in an electrochemical cell, you can adjust how much power, how much capacity you get, but you always have the cell. So there's a fixed cost. If you want more power or more capacity, it's always the same cost with lithium. Okay. For us, it's less cost to increase the capacity. So it's independent of the degradation.
Okay. And how do you plan to go to market?
We have a very high pain point of currently in Europe on the industrial side. Industrial consumers are looking left and right how to reduce their energy procurement costs. And that can be done with energy storage, both for the peak shaving demand, but as well for shifting large amounts of energy to times of where there's a lot of renewables in Europe, because that's usually where the prices are low. We have certain leads there. We have the first pilot system, but for the scalable case, we are already talking with an Austrian utility with whom we are doing a feasibility study. It's a paid feasibility study to build up to 7 first units in a renewable setting. So co-locating it with PV, with hydropower to help them generate more revenues. Because of course, for them, they're not earning money. If everybody has sun, the market prices are dropping to zero. That's not interesting. But if you have a storage, all of a sudden you can make a lot more money. So for the scalable case, we co-locate with renewables because that's a very homogeneous and scalable case. Once you understand how to put it next to a PV field, you can do that with every other PV field that you see.
I'm curious, Justin, what challenges are you anticipating to face over the next 12 to 24 months?
I think from also looking back now, we are 2 years in the game. We have so successfully raised 1.2 million euros in pre-seed money to date, and around 500K in non-dilutive capital. And I think in the last 1.5 years, especially, supply chain was a big issue. We're happy now that all the parts are in and they're in the lab and they're integrated, and the system is being commissioned as we speak. But still, getting components actually delivered is a challenge. Finding the right people will be a challenge, but we have good cards and have so far succeeded there. But also, of course, then achieving these milestones to actually build the system and achieve the economic milestones. So getting more contracts in. The more we have achieved on the tech side and to enable trust from customers, we will be able to sign more. But of course, it's an uphill battle as a startup with a big industrial solution as a proposal to sign early on commitments from customers.
Helpful. Thank you so much, Justin.
What do you need to get to be able to get those commitments from customers? Is it after the first pilot and case study, then you can start selling, or how do you plan on really rolling that up or scaling that up?
Yeah, what we're doing now is we go directly from the lab scale to a commercial scale with our first customer. And we have that first customer already really close. So they are really committed. They're also invested in us in a small amount. And we can build this first system at their premises, which is super valuable because that will already show in a megawatt range, okay, those folks can actually build a system in that range and it will work. What we need, to answer your question directly, of how do we get more commitments, the sales cycles are quite long. So oftentimes customers want the product delivered 2 years, 3 years, 5 years down the road, possibly, of initial contact. And having the commercial traction, but then having a lot of the understanding of how to actually make money with it. That is the second big aspect that we have in-house, because we started with how do you make money with energy storage? So we have a software tool in-house developed that allows to understand what is actually the business case? What is the right technology? It might not even be us, but how do you size it so that your customer makes money also depending on how the market might change? And that is really unique because most competitors that we speak with, they know very much about their product, but how to really make money with it, that's something that not that many really understand. And that's what will open us doors, because we can tell the customer, if you get this, this is how much money you will make with the system. And that is not as easy to do because you need to actually understand how to shift the energy in a profitable way on the market.
One of the potential challenges I see, everything in the world is going one of two ways. It's going Apple or Android. Either you pay premium for the things you love, or the rest is toilet paper and you couldn't care what the brand is as long as it's cheap and does the job. And with energy storage, I'm pretty sure it's going to fall into the latter of I want the cheapest, most effective solution. And if this is slightly cheaper than that, et cetera, I'm going to switch. How do you deal with that challenge? Because for industrials, for customers, they could give, excuse the French, they could give two shits what type of energy storage you use. If you're storing this by having things float, or if you're having whatever happen, or you have an anti-gravity machine and that's how you're storing the energy, great. As long as it's cheap, I'll take it. And it's environmentally friendly, I'll take it.
You said it at the end there, as long as it's environmentally friendly, as long as it doesn't have any fire hazard risks. We have talked extensively with Californian community choice aggregators. They can't build lithium sometimes because of fire hazard risks. If you talk about project financing, with the big guys like Allianz Global Investors, etc., who are at the other end of the financial pipeline that pays for these projects, they need solid ESG criteria in their projects now, and you need to have those sorted out. Now, we focus on being cheap. We focus on being more flexible, because you might be cheap, but if you build a system and that is not movable, you have it at this location, and it might have been cheap in the beginning, but we offer the customer to actually go from a CapEx perspective to an OpEx perspective. And that can be a big unlock for many who don't want or can't spend the big CapEx, because they can just get a subscription for a couple of years on energy storage. And then for us, it's okay if they don't want it or need it, because we can always ship it to a different customer. So driving down costs, scaling up so that we have more scale of production, reducing costs that way, and providing more flexibility to customers, plus being a safer and ESG compatible product, I think is then what will also help us defend it.
Okay, Pratibha, any last points?
Yeah, I'm just curious about your funding round right now. You said that you have about 1.2 million committed. So I'm curious what's the timeline to close? What are you looking for? And what are the terms?
So we are in the middle of the fundraising. We have talked with investors. We have seen good interest in it. I think one of the things with us is that we are still early stage overall. Still, we need to get over this capital, a mountain of capital in a way, to unlock really the scalable case. And I think from a timing perspective, it's very soon. So in like early Q1 next year, where we will close. And from a terms perspective, we believe that the market sets the terms. So we're happy to discuss that with investors directly.